Welcome to the Tuesday Target Audio Companion. I'm Penelope. Constantin is with me. Week 21 of 52, and Yuri opens with possibly his sharpest thesis of the year. Dictator math meets bubble math.
Penelope, the man is on fire. He starts with Iran. Every analyst on Wall Street keeps modeling the same quick regime collapse. Blockades, food shortages, people in the streets, game over.
And Yuri says, read the room.
Exactly. What actually topples dictators? Look at the men holding the rifles. As long as Iran's generals are still being paid and fed, the regime can survive almost any amount of civilian suffering. The Syrian government lasted a decade through hyperinflation, so Hormuz stays choked. Oil stays sticky. The inflation everyone wants to label transitory keeps living on the global tape, months longer than the algos are pricing.
And then, the same delusion is playing out inside the U.S. economy.
That's the brilliant pivot. AI euphoria is the rooftop party. The S&P prints all-time highs while the median stock sits 13% below its own high. Wayfair just told the world that household demand has flatlined. Mortgages around 6.5%. The consumer is suffocating under the floorboards, while everyone upstairs is toasting the chip.
And then the bond market kicks the door in.
5% on the 30-year, gone. The 10 years multi-decade trend line, gone. Besant reportedly wanted that line defended. The market said no thank you. Japan's 10-year went from under 1 to nearly 3 in 2 years. The price of money is being repriced everywhere at once.
I love Yuri's line. Admiring the penthouse while the foundation crumbles usually leads to a very expensive lesson.
That sentence belongs on a t-shirt.
Okay, week ahead. What's on the radar?
3 landmines. Nvidia earnings Wednesday after the close. One print that effectively sets the price of the entire global tape. Same afternoon, the FOMC minutes drop. Thursday brings global flash PMIs. And Friday, Kevin Warsh officially walks into the Fed chair role.
Here's the kicker. The market is now pricing rate hikes, tightening, by the brand new Fed chair.
A plot twist nobody bought tickets for. 6 months ago, you would have been laughed out of the room.
China?
Quietly face-planted on Sunday. Retail sales, industrial production, fixed asset investment, all missed by margins that Goldman's own desk called hard to recall from a country famous for massaging its numbers. The read-through hits global consumption names, base metals, any reflation story leaning on Chinese demand.
All right, the trade. Yuri's eye is on TLT, the long bond ETF.
Beautiful structure, a calendar spread. Sell the June 83 put. Buy the July 83 put. The big move has already happened. TLT cracked through 84 as the 30-year breached 5. Front-month bond vol is elevated. So Yuri sells that rich theta to whoever still wants insurance, while keeping a longer-dated put alive for the next leg lower.
Cheap, asymmetric. Aligned with the bond vigilante thesis?
That's the whole letter in one trade. Watch the foundation. Stay long volatility. Stay short certainty.
Final shot from Yuri this week. Protect gains before chasing fresh highs. Algos run out of buying power well before retail runs out of FOMO.
Drop the mic.
See you next Tuesday.